Welcome back. It's time now to take a look at the top business stories. Global experts meet in Dubai to discuss World Economic Forum agenda. Dubai needs to focus on knowledge-based economy, experts say. And we find out how the global retail sector is looking to reinvent itself. Asian markets closed mostly higher this Monday following the formal announcement of the €85 billion emergency aid package for Ireland by the EU. The GCC markets had a positive run today, while there were mixed results across the UAE bourses. The DFM was up nearly 1% to close at 1,674 points. The market's own shares topped the gainers, climbing 3.5%. MR Properties was up 1.5%. Arab Tech gained 1.75%. DP World climbed 0.5%, while Do dropped 0.5%. 64 million shares were traded, valued at 107 million dirhams. In the capital, the ADX fell 0.75% to close at 2,731 points. Abu Dhabi Commercial Bank dropped over 3%. Etisalat lost 1%. The energy sector saw gains today. TAQA as well as Dana Gas gained 1.5% each. 54 million shares were traded, valued at 114 million dirhams. For analysis of the markets, we're joined now by Gaurav Kashyap, the head of the DGCX Futures and Options Trading Desk at ACM Middle East DMCC. Welcome to the show today, Gaurav.
Glad to be here, Laura.
Now, in the currency market, we saw risk appetite increase off the back of the Irish bailout package announcement this Sunday. So the US dollar has actually strengthened off the back of this. Tell us about what the dollar is going to do this week.
Well, Laura, I think the announcement by Ireland just gave the markets a brief relief rally. You know, we see how high-yielding currencies gain against the US dollar, but I think it's only going to be limited to a relief rally. There's too much risk in the markets that could, further impact risk aversion and keep it propped up, which would mean continued dollar strength. A couple of the three stories that we're looking at, first and foremost, would be the escalating tensions coming out of the Korean Peninsula. Right. Although China has thrown its weight into the whole mix, that should kind of decrease the types of tensions. But unless that escalation calms down a little bit, we will see the US dollar continuing to gain on that news. Okay, another thing that we're following is contagion risk coming from the Eurozone. It's been reported that not only will Portugal be looking at requesting close to 35 billion euros, but now Spain has also entered into the fray looking at about 255 billion euros. And now we also throw into question, does the EU actually have enough funds in that bailout package to, successfully bail out these nations? So those two factors, along with, of course, China's plans of tightening the monetary policy. If you recall, the reserve ratio was looking at being hiked by today, but we shouldn't be ruling out another rate hike probably before the year end. So we're expecting the dollar to probably close out the year on a very positive note.
Great news for the dollar there, definitely. So a lot to look out for these next couple of weeks,
Absolutely.
Especially. Now, in terms of commodities, gold seems to have settled, and crude seems to be sort of climbing from its 81 level from last week. What are we expecting to see in the commodities market this week?
It's a great point that you said those 81 levels, because I'm still liking those 81 levels. We saw it bounce very strongly after having a retest of those 80 to 81 levels last week, despite very bearish crude inventory data. What I mean by bearish crude inventory, we saw a large buildup in the crude inventories, yet we still saw crude prices increasing. Now, of course, as I said, the problems from the Korean Peninsula would have a very positive impact on commodities. We would see gold probably have a retest of 1,400 if that tension doesn't subside. But I think crude looks like still a fantastic buy above 81, towards 81 and higher. But gold, I think we should probably see it stay within this range between 1330, 1380. It will end the year lower, but this is, of course, barring any surprises.
Thanks so much for your time today. See you next week.
It's always a pleasure.
Over the next few days, over 600 experts from around the world are meeting in Dubai to take a hard look at economic impacts that dominated the world stage over the last 12 months. They're also here to outline the agenda for the World Economic Forum annual meeting in Davos next year. June Wrigley reports.
This is the third summit on the global agenda for the World Economic Forum being held right here in Dubai. This is a pivotal moment in time as the world moves away from short-term responses to the crisis to finding long-term solutions. Today, leaders in the fields of academia, business, government and civil society have gathered here to brainstorm, network and address some of the most pressing issues and trends that the global economy may face. A survey conducted by the Global Agenda Council members prior to the summit revealed the most significant trend of the global economy in the next 12 to 18 months is global power shifts. In short, this refers to the rise of strong emerging economies like Brazil, India, and of course, China. Forum members were focused not only on the risks associated to this post-crisis period of transition, but also on the resilience of the economies.
Risks here are not the traditional investment risks and market risks. It is more about the risks to the global system, its function, its ability to function, and more importantly, the global system being prepared for possible shocks, if not necessarily expected, but possible ones. And that is the key thing right now.
As Council members brainstorm over the issues to be put forth at the World Economic Forum Annual Meeting 2011 in Davos, the agenda outlined here in Dubai will be integrated into January's forum. But why was Dubai chosen for this important meeting of minds?
It's taking place in Dubai because Dubai, in a world where geopolitical and geoeconomic power is shifting, becomes in some ways a center. It's a center in terms of being in the middle between North and South, in the middle between East and West. So when we discuss the future of the world, I think the right place is here. In addition, Dubai and the Emirates have shown a very forward-oriented vision, and we are discussing here the future.
Dubai's resilience through the crisis has provided an example of strong leadership and vision while navigating turbulent economic times. It seems that Dubai has learned where its strengths lie and that its future growth is actually in its core fundamentals.
We were insisting that Dubai start moving toward the next phase of growth, considering or concentrating on the real economies sector, such as the trade, the re-export, retails, the tourism, the aviation services like the financial services, and this is what Dubai get used to do before the economic slowdown. Maybe in the past, before the economic crisis, the real estate and the construction was leading the growth in our economy, and regardless whether this is good or bad, we want to say that we went back to the fundamentals.
For Dubai, going back to the basics may be the best way to tackle economic growth, but this may not work for all economies. It goes without saying that this is a great time of change. And although there are countless new risks coming from unpredictable places, let's hope these global experts don't get lost in translation. June Wrigley, City 7 Business.
A knowledge-based economy as well as an upgrade in various areas of Dubai's legal system are needed to drive the UAE economy. The third Arabian Business Conference got underway in the city today. Experts said Dubai has been preoccupied with picking up pieces within the property sector. But a shift towards increased knowledge will be the key to the future and must be made a prime focus. Industry heads in Dubai also stressed that the Emirate is showing prominent signs of recovering.
Total banks deposits have increased, re-export business increased by 15%, hotel occupancy rates increased by 14%, number of new licenses issued compared to licenses cancelled is 3-1. So there are good signs of recovery, and Dubai is still strong in its fundamentals. No matter how much we have our strength in the hard infrastructure, we need to have a very strong education. We need to have a very efficient, transparent legal system that people have trust in. And without these two factors, we are not going to regain the investors' confidence.
GCC markets closed mostly green today. Let's check in on those numbers now, starting off with the UAE general indexes. Coming up now, let's take a look at the major international currencies against the dirham, followed by the price of oil and the precious metals. On the way after the break, we talked to David McAdam, the head of retail in the MENA region at Jones Lang LaSalle, about the changes to the global retail industry.